Semiconductor heavyweight TSMC lifted its revenue outlook after a stronger than expected quarter. It's really helping some of these fears, though, of a slowdown in the AI hardware boom, or at least putting some of those fears off, I should say. The company's U.S. listed shares jumped in pre-market, lifting fellow chip makers Nvidia, ARM, and Broadcom here. Taking a look at some of the other results here that we've gotten, because of course we got the monthly results that kind of help us put together a picture of what TSMC would ultimately be able to communicate to investors here. But adding some additional color to this year-over-year third quarter revenue, increasing by about 39%. Net income, diluted EPS, both increased as well here by about 54%, 54.2%. And compared to the second quarter of 2024, third quarter results also quarter over quarter represented a 12.8% increase in revenue, 31.2% increase in net income as well here.
Yeah, and I think the big picture is that this is really putting to rest some of those concerns that we saw creep into the market and trigger a sell-off, a global sell-off that we saw in so many of these chip names earlier this week, and that was on the back of results from ASML. And I was parsing through some of the commentary that we're getting on the street here this morning, and really what we've gotten over the last couple of days. And there was a recent note out from UBS that caught my attention. They were basically talking about the fact that they don't necessarily see ASML, really the kickoff here to chip makers this earnings season, as being a reliable predictor here in terms of some of that growth that we are going to see. And I think the results that we got out this morning from TSMC very much prove just that. Once again, showing the fact that demand for artificial intelligence remains very strong, and as a result, we're seeing a tick higher, and you can see it across the board on your screen right now. You've got Nvidia up just about 3%. You have ARM even moving to the upside about 4%. So I think this earnings season is going to be key as we get a better idea of what that future growth looks like. And there has been also some talk just about a bit of a divide just in terms of consumer demand on the product side and consumer tech demand. Maybe that could be just a little bit mixed. But when it comes specifically to the AI demand and the global chip story and what we are seeing this morning, it looks like investors feel a little bit more confident maybe about the future.
We both grew up in Southeast PA, so we can all appreciate this King of Prussia Mall reference here. So ultimately, thinking about the broader chip landscape right now and trying to figure out exactly where we are from the hype phase all the way out into everybody being able to touch and feel the product and take it home and also experience the product, it's almost like you still need a "you are here" type of map within that mall. And you are still in so much of not just the hype phase, but the scaling phase. And that's why these chip companies are continuing to see and be able to tout some of this demand, because everyone is still trying to scale up until we can get to the point where we're finally at that model stage to figure out exactly where these things are going to play into our everyday lives, that are then the applications sitting on top of those models, sitting on top of the chips.
You know, I have to be honest, I did not know where you were going with the King of Prussia Mall reference
I bring
at the start of that point, but you brought it all the way back home, and it makes a lot of sense to me. If you're not familiar with it, it's a massive mall. And that's what you were trying to say, just in terms of you are still here and some of that growth then going forward.